Hi, Monk, and this is the Monk Way. Let me introduce a list of stocks that actually pay you monthly. This means you're getting paid cash to your account every single month out of the year. Dividends are usually paid every 3 months, so these stocks are more unique and pay you more often. This gives you more room to invest with, and it's better if you actually want to spend that money. I'm not recommending you buy these. Do your own research. Subscribe, hit the bell, and leave a like for more investing videos. I make these animations every single day. And check out Monk's Market Mastery below. A complete animated stock market guide, 75% off for a limited time. There's no better value for 24 unique videos from me, teaching you everything you need to know about investing. I also recommend Repo as my favorite free investment app. They allow full after hours trading, that's 9.5 extra hours. Robinhood only offers 2.5 as a comparison. This means you can trade these stocks at any time, even when the market is closed. Never miss out on huge spikes after hours again. They also give you 2 free stocks worth up to $1,000 just for signing up and making your first deposit. Link in the description and comments below. There are about 5,000 stocks in America, and over half of them pay you a dividend, 2,700 companies. Most of these dividend payers pay you quarterly, meaning every 3 months, which is 4 times a year. So if you buy Apple stock for that 1.3% dividend, you'll get paid 1 time every 3 months, or about 0.33% 4 times a year. Of those 2,700 companies, 300 of them pay you monthly. This is pretty rare judging by these numbers. There are a few advantages to getting paid monthly. If you're retired, you might want spending money every month. Maybe you just like seeing money coming in, and knowing you'll be getting paid often. I know I would personally prefer to be paid every month just like a job, so it's a shame this is not the norm for dividend stocks. Another advantage is compounding. You can reinvest that dividend and get 2 extra months of gains, compared to a company that would pay per quarter. It's like you're getting monthly passive paychecks. Let's look at some really good dividend stocks that pay you monthly. I recommend looking into these along with regular, more well-known companies. These tend to have higher payout ratios. This means most of their profits are used to pay investors. This leads to less growth, and sometimes huge volatility. These are all medium to high risk for that reason. The first stock to watch is Realty Income, with the symbol O. It's up 38% in a year, 78% in 5 years, and 245% in 10. And that's not counting the 3.41% dividend. That's a high dividend and extremely high growth. They actually had 16.8% returns a year since 1994. Compare this to the 10% a year from the S&P 500. Huge gains here. Their payout ratio is 200%, so they're paying you 200% of their profits. This is very high right now, so it's not sustainable. And they had 22 years of dividend growth, not bad at all. 49 years of dividend payments, a great record here. Because their stock price ran up so much, they're not the best value right now. A 61.6 PE ratio, pretty high. The market average is 22. Profits are a bit low compared to price. 18.4 PS ratio, the average is only 2.2, so revenue is a bit low too. Price to book of 2.9. This is not bad, average being 3.5. They have okay debts at 0.8 DE ratio, 0.5 being good. This is a bit higher. Let's learn a bit more about this company. Realty Income is a REIT, Real Estate Investment Trust. They own commercial properties, they then lease out to other companies. They have 5,800 properties in total, and 93 million square feet. Huge companies rent from them, including Walgreens, 7-Eleven, Fedex, Dollar General, LA Fitness, Dollar Tree, AMC, Walmart, Sam's Club, and many more. So they buy land and buildings and rent it out to these companies. They did drop 40% in the last market crash, but recovered in a year. This is much faster recovery than the market as a whole. This seems like a pretty good bet. But if real estate prices were to drop heavily, this stock would drop along with it. They're also known as the monthly dividend company, so this tells you something about their priorities. They are pretty overvalued at this time, but a good stock to watch. The second stock to watch is Street Capital Corp, symbol MAIN, up 16% in a year, 33% in 5, and 195% in 10, with a high 5.82% dividend. Great growth and dividends. They have a 97% payout ratio, that's very high, but this is a common theme with these monthly dividend stocks. They've been paying monthly dividends since 2009, so 10 years, with 8 years of dividend growth. They have a good value right now, 16.5 PE ratio, 22 is the market average, 11.1 PS ratio, 1.8 price to book, and 0.7 DE ratio. Overall good profits, not bad revenue, and good money in the company. This company is only worth $2.67 billion, so a smaller company. They're 10 times smaller than Realty Income, the last stock we looked at. This company lends money to smaller companies, so they help companies that make about 10 to 150 million a year, pretty small companies, basically giving them money to expand when they need it. They actually only dropped 25% before recovering in the last crash, and you're getting almost 6% a year in dividends, or 0.48% a month. A value stock to watch right now. If you enjoyed the animation so far, please leave a like below. This video actually took me 14 hours to finish. I spent 4 hours on research for these more obscure companies, 2 hours on voiceover and editing, 4 hours on animation, 2 hours in coding, and 2 more hours on the details for YouTube. It's very hard work, but you leaving just 1 like makes it all worthwhile. And if you want to learn how to make these videos and make it big on YouTube, I have a YouTube mastery course on sale in the description below, teaching you how to get the first 1,000 subscribers fast. Another REIT we can look at is Ltc Properties, symbol LTC, up 21% in a year, 26% in 5, 115% in 10. They have a high 4.31% dividend. Their payout ratio is 106% right now, so a bit high. They've been paying out monthly since 2006, 13 years. Despite the payout ratio, they're a good value right now. PE ratio of 20, lower than the average of the market. PS ratio is a bit high at 12.1. Price to book is good at 2.7, and fair debts at 0.9. They're also a small company at $2 billion market cap, more risk. They started in 1992, and they invest in senior care centers, 200 investments in 30 states in America, senior housing, and nursing facilities. People will always get old, so these will always be needed. This stock is pretty stable, but in a boring sector. Next we have a Canadian service provider, Shaw Communications. They're up 12% in a year, down 20% in 5, and they're up 17% in 10. Not too much movement here. They have a high 4.41% dividend, with 2 years of growth, and 109% payout ratio, a bit high. They've been paying out monthly since 2005, 14 years of monthly payments. A good PE ratio of 18, price to sale of 2.6, not bad, and debts of 0.9, not too bad. Shaw offers internet, mobile data, and TV. They also have a stock listed in America, so don't worry. This stock is interesting because 5G is coming. It's likely these service providers will see a spike in the coming years. Otherwise, it's still a pretty slow moving stock, with a high dividend, with potential growth coming after 2020, when 5G becomes real. Now we have an oil company, Pembina Pipeline, symbol PBA, up 6% in a year, down 12% in 5 years, and up 66% in 9 years. Some mixed growth here. They have a high 4.88% dividend, with 3 years of growth and 105% payout ratio, a bit high. They've been paying out monthly since 2010, so 9 years. A pretty good value at 15.2 PE ratio, 3.1 PS ratio, and good debts at 0.5 DE ratio. This company is also Canadian, but on the American Stock Exchange. They depend on moving oil, so they would drop and go up with oil prices. An interesting non-REIT company to watch. The next one is a bit safer than the rest, because it's a combination of stocks. The S&P 500 High Dividend ETF, or SPHD, containing 50 dividend-paying companies, up 7% in a year, 33% in 5 years, and 60% in 7. Good gains here, with 4.5% dividends. They've been paying dividends since 2012, every single month. That's 7 years. In terms of value, they have a PE ratio of 14.9. Very good. Let's see what companies are in this stock. The biggest companies include Iron Mountain, AT&T, Kimco Realty, Altria, Weyerhaeuser, PPL, Philip Morris International, some more obscure companies in the S&P 500. But they have high dividends. These monthly dividend stocks are pretty volatile. A combination like this ETF might be a better idea. We can see some higher risk companies in this list. Now let's look at some blue chip stocks that when combined will pay you a monthly dividends. You just have to combine companies that pay on January, then one that pays on February, March, and so on. A combination of 4 to 6 companies that pay on different months will lead to a monthly dividend portfolio. These are the companies I would personally invest in. Let's start with January. I like Walmart's at 1.8% dividend, 44 years of dividend growth, and 43% payout ratio. Good stats here. A great low price retail company that survives a market crash. This is a fair value at 26.6 PE ratio, up 16% in a year and 50% in 5 years. I also like Disney at 1.3% dividend, also paying in January. 2 years of growth, but only a 30% payout ratio. The new streaming service will give them a huge stream of income. Everyone knows Disney, Pixar, and Fox, so this company will always be blue chip. A good value at 17.1 PE ratio, up 15% in a year and 47% in 5. The runner-up in January, Pepsico at 2.7%. For February, I like Apple at 1.2% dividend, 6 years of growth at a good 26% payout ratio. Another blue chip company, with the iPhones being extremely popular. They're also growing their digital services, being less reliant on phone sales. A good value at 21.5 PE ratio, up 23% in a year, 134% in 5 years. I also like Procter & Gamble at 2.4%, AT&T at 5.3%, Verizon at 4%, AbbVie at 5.2%. For March, I like Microsoft, 1.41% dividend, with 15 years of growth and a low 43% payout ratio. Everyone uses Windows, and they have great new hardware in the Surface series. Their digital services and gaming services are always growing. A good value at 27.1 PE ratio, up 35% in a year, 195% in 5. I also like Johnson & Johnson at 2.8%, Bank of America at 2%, Intel at 2.2%, McDonald's at 2.4%. For April, we have Coca-Cola at 2.9%, 56 years of growth, but a bit high payout ratio of 76%. This is a dividend staple for many people, including Warren Buffett. People will always drink soda. Medium value at 30 PE ratio, up 12% in a year, 27% in 5. Because these companies pay 4 times a year, we only need a few stocks to get paid monthly. Walmart also pays in April, and for May we have Apple, Procter & Gamble, AT&T, and Verizon. In June we have Johnson & Johnson, Microsoft, Walmart, Bank of America, and Intel. July we have Disney and Coke. August we have Apple, Procter & Gamble, AT&T, Verizon, and AbbVie. September we have Microsoft, J&J, Walmart, Bank of America, Intel. October we have Coke. November we have Procter & Gamble, AT&T, and AbbVie. In the last month we have Microsoft, J&J, Bank of America, Intel, and Coke. Basically, we only need a list of 5 stocks to get paid monthly. These are blue chip, lower risk companies, which might be better for the passive investor. Depending on your risk tolerance, I will pick a few blue chip companies, along with 2 of these actual monthly dividend companies. This way, we have a steady stream of income, along with growth. If you learn something and want to learn more, join Monk's Market Mastery, a fully animated course on the stock market. It's actually 75% off for a limited time, because I want everyone to learn. This is the lowest price you'll ever get, so don't miss this sale. It will teach you the basics like how to buy a stock, what is a stock, to swing trading high-risk companies, in the exact same style as this video. And check out Webull for the best investment app. Subscribe, hit the bell, and leave a like for more investing videos. I make these every day. Keep watching to invest passively the Monk way.